All right, my name is Joel Jones with the West Virginia Beekeepers Association, and the presentation that you're about to see is the How Your Club Can Become a 501c3 by Dr. Singh Knights. Dr. Singh Knights is an assistant professor and extension specialist at the West Virginia University. For the last 10 years, she's been specialized in the areas of agribusiness and economics and management, with emphasis on contributing to the development of a sustainable agricultural production system through research, teaching, and extension education. Her work centers on the belief that there are enormous opportunities, increased production, and of a demand for locally and regionally produced agricultural products, and to develop new market opportunities for agribusiness operations serving local and expanded markets. She works to help the operators capitalize on these growing opportunities while managing resultant business risks. So clearly very experienced, and the experience is very pertinent to beekeeping. And with that, I will turn it over to Dr. Singh Knights.
All right, thank you very much, Joel. And so as we begin speaking, I will take my video off so that we can conserve some bandwidth. And if we do have any questions as people join us, then I will show my video again to be able to answer you in person. So here we go. So it's wonderful that we're taking the time today to really learn about, choosing and maintaining a farm business structure. Because, that can be a long journey as the farm grows and shifts and perhaps, transfers to other operators. So today I have been asked to share a bit about how your club can become a 501c3, but I always believe in the big picture. So I'll kind of set it up and explain the big picture with respect to farm business structures, and then we'll kind of get into the 501c3 businesses. And so I just want to remind you that, thinking about farm business structures really is, and actually choosing the right business structure is like building, the foundation of a house, right? You want to really start with the best foundation. And so as you really pay attention to your land and your resources and, your beehives and what's best for them and so on, thoughtful attention to legal issues often, helps create that unique, sustainable farm. So at the outset, I do want to say that this information here is for educational purposes and it does not constitute legal advice. And these are my views, not necessarily those of West Virginia University's Extension Service. And really, as we talk about this information, we really encourage you to work with an accountant or a tax attorney because your situation is very specific. And I always joke, when you've seen one farm in West Virginia, you've seen one farm in West Virginia. And so before you take any action, we really do encourage you to speak with your accountant or tax attorney about your specific situations. So let's talk about choosing a business structure and how that 501c comes into the picture. And so really corporate laws allow us to form different business structures and farm business structures or different entities for different benefits. And we'll talk a little bit about taxation benefits, we'll talk about liability benefits and so on. And so fundamentally, these laws allow people to create a legal entity that's separate from themselves, and that separate legal entity can do business under its own name, okay? So for example, when you create that business, you're really creating a legal person in the eyes of the law, and that business entity has rights and duties. It can enter into contracts, it can possess property, it can purchase property in its own name, it can sue, it can defend itself if it's being sued, and so on. So we have these legal structures, right? And they can be either formal or informal. So your formal entities, those, and we'll talk about these, your C corporations, your limited liability companies, your B corporations, your cooperatives, your non-profit, which we'll talk about, and then your S corp, tax status. These are all considered a person in the eyes of the law, so that that legal formal entity, as I said, it can absorb and it can protect owners from personal liability, unless the owners begin exploiting the rights of the entity, unless the owners, do something that contradicts the formal entity rights and privileges. And we'll talk about that. That really, when we think about that legal entity, is sort of, people think about it as putting a veil over the business or a shell over the business. And so if they do anything that's fraudulent or in violation of those entities' rights and privileges, that veil could be easily lifted, which lends the business to being sued and so on, right? So we'll talk a little bit about that later on. Now, you don't always have to choose a business entity, because sometimes just by your actions, you can be considered a default entity. For example, a sole proprietorship would be if you have an individual that is selling, honey, other crops, other livestock, and is doing so as a business, and then you are in turn thought of as a sole proprietorship, even though you didn't ask to be designated as such. A general partnership is the same thing. If you are, by your actions, there are two or more people that's coming together to sell a product or a service, they will be recognized as a general partnership, even if they don't file any paperwork to do so. Same thing with an unincorporated nonprofit association. If you and a couple of your friends are doing, work, charitable work, where the intent is not to earn profits, but you can be considered a UNA, an unincorporated nonprofit association, just by your actions, okay? So now, do you have to choose an entity? That should be an entity, I'm sorry. So as I said, if a farmer does nothing, the farm operation will be treated as a default entity. If it's one owner, then a sole proprietor. If it's more than one owner, then a general partnership. And we'll talk about why that is, a good idea, but sometimes not such a good idea. So choosing not to form a formal entity is okay, because as you will see, it really does take a lot of time and money and willingness to follow certain formalities associated with these formal entities. And you really have to review and understand the benefits and the risks that you are taking when you form these formal entity, or when you elect to be a default entity. So what are the benefits that people get from forming that legal entity? Well, as I said before, their personal assets are protected up to the amount that they have invested in the business. Another thing is that because we have these formalities, we lay out certain things about how we want the business to be run and who has rights and responsibilities and so on. And that promotes good business practices, right? We can also use that formal entity to raise funds from outside investors. And then if you wanted to pass this business on to an heir, then it's much easier to do that if it's its own separate entity, right? So it facilitates that process. So the benefits are there. And so when you choose not to form a default entity, it's simple, but then you don't enjoy these privileges, right? So simplicity is not always, a good thing. So for example, with a formal entity, you might be, one of the things we do recommend is to have separate, bank accounts and diligent accounting, and have this organizing agreement so we know who's doing what. And then as a default entity, you don't have those, best business practices. So that's a benefit that you will not enjoy. So as I said that, and remember I said, you know, when you've seen one farm, you've seen one farm in West Virginia, right? And so the driving forces behind choosing a business structure or an entity for your business or for your farm or for your farm group or for your particular situation could be very different from your neighbors, right? But some reasons people choose one structure over another depends on who's participating in the business, who has, you know, which rights and privileges, and who do you want to, you know, to have certain rights and privileges, who has the authority to make decisions, how flexible do you need the structure to be, what are the potential liabilities of the business? So for example, when we're dealing with bees and bee businesses, you know, there are a lot of, you know, allergic reactions people might consider and so on. And so that might be something that you want to insulate your business against. You know, the type of business structure depends on the purpose of the business. Is it for profit? Is it as, you know, a social enterprise and you don't really intend to make profits? Who's liable for decisions and actions? Do you want to be able to draw down on the profits, and how do you want to be able to do that? Do you want to minimize taxation? You know, how will the business be financed? Do you want to pass it on? So with respect to, you know, like taxation and succession planning, for example, creating that formal entity is a useful way to transfer the business as a whole rather than, you know, you're transferring individual assets, maybe to different people, right? And again, it could have, you know, transferring it as a whole might have a lot of favorable tax benefits. For example, if you have farmland and you have that farmland set up as an LLC or a C corporation, we'll talk about that here in a bit, that business may be insulated from higher estate taxes if the heirs are properly named as owners of the business. So those are really important things to consider, but it all depends on your individual situation, right? So how is a formal business entity created? So there are really 4 steps. The first is to decide, then to form, then to organize, and then to implement. So when we talk about deciding, and I'll show you a couple flowcharts here in a bit, but the deciding step or phase is really to help people like you decide which business entity is best for their farm operation. And, you know, farmers will, people like you will narrow down the options based on certain factors and characteristics you want in your business entity. And then the second phase has to do with the formation phase. And in this phase, you need to know what it takes to form your chosen entity. So how do you set it up? What documents need to be filed? Who do you need to file these documents with? That's the formation phase. The organizing phase has to do with creating what we call the organizing documents or the bylaws, or in some cases, if it's a partnership, the partnership agreement or the operating agreement. That really tells you, how are you going to organize this business? How are you going to divvy up the responsibilities and so on? And then finally, the implementation phase, and that's really, really important because for whatever business structure you elect, there will be certain best business practices that you must implement in order to keep the designated business structure. So we'll talk about that a little later on as we go through. And remember I said, you know, these processes would be different depending on the business entity that you select. So we do encourage you to work with that accountant or tax attorney. So, so here is a nice snapshot of different entities and what their benefits are. So some of their benefits, but also the formalities and structures that are necessary, and also the tax implications. So if we were to start with the first ones being your sole proprietorship, so you see that the one owner, so if you want to maintain control over your business and manage all your decisions, that's the best business for you, right? The sole proprietorship. You can make profits, right? I'm reading through here, if you can see my mouse. You can also, in addition to making profit, you can also have a social purpose, right? So you can be doing some charitable work. And then in this case, your business does not pay taxes, but the taxes it passes through. So the taxes, you pay individual income tax based on the earnings from your business. Same thing with a, oops, I apologize. Same thing with a general partnership. It requires 2 or more persons. You can make profits. You can have a social purpose. And again, with the partnership, you pay individual income tax. So that income tax responsibility passes through. Let's jump over here to the limited liability company. So it would be, if we're talking Birds Bees LLC, that's how the name is going to be, with that LLC at the bottom. Well, at the end rather, and that stands for Limited Liability Corporation. And then again, you can have a limited liability corporation with just one business. So that would be the equivalent of a sole proprietorship if you just wanted to form that legal entity around your business, even though it's just you. You can transfer that entity. You have personal liability protection to what you have invested in the business. So if you have, 20,000 in this business, and somebody sues you for 40,000, they can only sue you for the 20, which is within the limits of the business. You can make a profit as well as have a social purpose. And again, that income tax passes through, so you pay individual income tax. And you can have a limited liability with this C corporation status, with S corporation status, with B corporation status. So there are a lot of, permutations and combinations of these different types of entity. So that's why we say really talk to a tax accountant or your tax attorney to really understand which is the correct, business entity for you. So you can choose to have, an LLC with, C corporation status, as I said, and that basically is, if you do that, then the business will pay taxes, and then the owner will pay individual taxes on any profits or earnings from this business. With the S corporation, you can form, so you have the limited liability company, but if you elect S corporation tax status, then you would pay only individual income tax, okay? So as I said, a lot of different types of businesses. You can form a C corporation by itself. And again, this is where we get into, you have to have these formalities and structures in place. So people who don't want to worry about organizing documents and having annual meetings will simply form an LLC. But if you do see the benefits with these structures and these annual meetings and so on, then you have some options. Your C corporation, which, you have to do these as well, but you can be a sole owner. And again, you have that transferability, you have liability protection, you can make profits. You're not allowed to have a social purpose with a C corporation. B corporations, the B stands for benefits. So here we're talking about businesses that, we talk about it as social benefit corporations. So generally reserved for businesses that want to make a profit, but they also have social benefits. So these are businesses that really go for that triple bottom line. You know, they want to help people, they want to make profits, but they also want to have some environmental goals. So that's kind of your B Corporation. Again, some of the same structures and formalities in place, some of these, but you, as I said, you can also have a social purpose. And then with your S corporation, so S corporations are really, it's basically a tax status that you can file for. So it's a federal tax status. And here you're saying that I don't want to pay any corporate income tax. I want that income tax to pass through to me, the individual, and I will pay the individual tax rate. And so there's some potential self-employment tax savings there. A cooperative, you know, again, if these are, you know, a few people that come together to do business together, once you form a cooperative, you have these what is called patronage dividends. And then, so generally with cooperatives, you do tax the cooperatives at the corporate tax rate, and then the individual members receiving that patronage dividends will also pay taxes on those. And then your nonprofits, which is the reason I'm here today, is really about, you know, so you do have your, or you have to have these organizing documents, you need to have these annual meetings. You cannot have any owners. We'll talk about that here in a bit. But nonprofits can have limited liability protection. You're not allowed to make a profit. Well, I should rephrase that. You can make a profit, but your major purpose would be your charitable purpose. So you can have that social purpose. You can select to be tax exempt, and you could select to have tax deductible donations made to you. So this is when you become a 501c, that's, and then you elect that status, and then 501c3, that's the 3 is added when you elect to receive tax deductible donations. So the organizing part of the process comes in where there are certain types of entities that requires organizing documents, right? As I said before, the organizing documents really tells you about decision-making procedures, the roles of your members, responsibilities, administrative matters, and so on for running the business. So, you know, what if a business owner leaves, or what if a business owner dies, or what if the business closes or is forced to close, or how is the business valued? What do we do with the assets once we've closed the business? All of that would be contained in these organizing documents. And so it stands to reason that companies or businesses that form that legal entity really have the benefit of this organizing document, right? The entities that don't require it don't have the luxury of having things, you know, decided for them. So they kind of go with the flow, and that can create some confusion sometimes, right? The other thing is that, you know, your day-to-day production standards and quality parameters and who we're selling to, and those kinds of operating decisions, because those are generally moving targets, we don't usually include them in your organizing documents, right? But the business entities certainly your LLC, the C Corps, your B Corps, your cooperative, your nonprofits are required to have these or some type of organizing document. And then, so here is the formation and organization. So let's think about selecting a business entity. And this is a flow chart here that really tells me whether I would be eligible for a nonprofit or nonprofit status. So I'll walk you through this flow chart, and then we have a couple others that kind of deals with some of the other business types, and we'll walk through them as well in a little bit. I'm just checking to see if I have any questions or anything at this time. So no questions. All right. So you're thinking about creating an entity. So this is where we want you to start. So the question would be, are you comfortable never being able to sell the farm or profit at a business? And we know that a lot of farmers, this is, they farm, and then when it's time to retire, they're hoping that that farm is going to be their retirement income, right? If you answer no, you are not comfortable with never being able to sell your farm at a profit, then a nonprofit is not for you. Okay, so you would go on to the next flow chart, which is on the next page. But if you are comfortable never being able to sell the farm at a profit, then the second question is, are you okay with having separate personal and business bank accounts and doing paperwork to protect your personal assets from liability and also to gain some tax benefits? So if you answer yes to that, we're going to go down here because chances are you could be considered for nonprofit status. If you answered no to this, you do not want to separate your business and your personal bank accounts. You want everything to be lumped in there. So little Susie's dance classes and the purchase of, your hives from another farmer, that's all going to be rolled into one account. Then and if there are at least 2 individuals, then you can form an unincorporated nonprofit association if you don't intend to, if you don't care about profit. So your main objective is not profits. If you do not, if you answered no, so you're not okay, and there are at least 2 individuals involved, no, then you might consider joining forces with another nonprofit that's aligned with your cause, okay? But let's move over to where you said you were okay with not being able to sell the farm at a profit. You were okay with maintaining separate business and personal bank accounts. And is your farm operation dedicated exclusively to a nonprofit cause that benefits the general public? And that could be education or it could be scientific advancement. If that's the case, so you have to meet these 3 bars, then you might consider forming a nonprofit organization in your state. And so forming that nonprofit organization is kind of a 2-step deal. So you have to form the organization, the business entity in your state, and then you have to apply at the federal level to the IRS to get that 501c, which is to get the non-tax status or tax exempt status rather, and then apply also the 3 part of it would be to be able to receive tax exempt donations. Now, so you're eligible to form a nonprofit organization, but there are 2 tests that you must meet in order to do that. One is the commerciality test, where they say, are the main services or products you're offering not competing with for-profit companies? So you cannot be selling products or services and competing with other for-business entities. And we'll talk about that in a little bit. And why that is so, it's because nonprofit organizations have certain advantages, right, that allows you to earn or to have certain tax benefits and so on that a for-profit business does not have. And so it's really unfair. So, to be directly competing with them because, you might lower your prices and so on. And that is unfair to your for-profit company. So you have to pass the commerciality test that you're not competing directly with for-profit businesses. And you also have to pass the public support test, which is at least 1/3 of your revenue must come from public support, from donations or public grants or from foundations and so on, not from the sale of your products or services. So we'll talk a little more about that later on, but you must answer yes to both of these questions, and only then will the IRS say, yes, you qualify as a 501c3 nonprofit. But that is sometimes a lengthy process, right? 6 months and more, and it can have processing fees of upwards of $400, depending on, different situations, how much gross revenue you're going to make, and how big, and how many members, and those kinds of things. If you do not pass these commerciality tests, meaning less than 1/3 comes from public donations and you are directly competing, then you will not qualify. Let me see if I can get this off here. You won't qualify for 501c3 tax exemption, but you could still be incorporated and designated as a nonprofit organization in your state. You will still have to pay taxes and so on, but you won't get any of the tax benefits. But it's always, it's a good way to sort of advertise your business that you're doing some charity work, okay, or some charitable work that might be environmental, it might be contributing to science and so on. But if you are if you're incorporated as a nonprofit organization, just at the state level, you're not applying for 501c3 tax exemptions, then yeah, you can operate at the state level as a nonprofit organization. So then if a nonprofit isn't right for you, and I know we're supposed to just be talking about nonprofit, but don't despair if a nonprofit is not for you. There are certain other options, like I explained before, the LLC. We're going to be sharing this so that you guys can take a minute to look through this, but it really talks about, are you okay with separating your personal and business bank accounts? If you say yes, do you plan to seek funding from, from outside sources, venture capitalists and so on? If you say yes to that, you might consider forming this C corporation where you are basically going to have shareholders or stockholders in your business. If you're not comfortable separating those accounts, then a sole proprietorship or general partnership, if it's more than one person, would be the best thing for you. If you are okay with separating your business accounts, but you don't want to, to have shareholders and so on, then you can form a limited liability company and then elect to have S corporation status. Remember, I said that is where you'll not pay corporate taxes, but you will just pay individual or personal income tax, right? The other one is if your business is inspired by a social purpose, like I said before, you have some charitable purpose to your business, and that's more important than maximizing profits, then you can form what is called this B corporation or benefit corporation. If you don't, then, other things would be like your cooperative and so on. If you do form a B corporation, then again, you can select or elect C status or S status. That is C status if you're paying corporate taxes and individual taxes. And S corporation if you're only going to pay individual taxes. So again, as I said, a lot of permutations and combinations of things that you can do, right? So that's where we want to get a little bit of outside help. So bringing us back to nonprofit organizations, remember I said that nonprofits don't have any owners, right? So the thing about a nonprofit is nobody can own it. And so a lot of, well, I'll talk about non-stock corporations on the next slide, but your nonprofit corporation, nonprofit organization rather, must be managed by a board of directors, at least 3 people that are, so here it is, how many? At least 3 will serve on the board of directors from the members of that nonprofit organization. And generally it's, as I said, birds, bees, or bees, birds, or, you know, the farm name, and then it's followed by that Inc., which says it's incorporated, and the designation would be nonprofit, right? There is some, if you are incorporated, there is some personal liability, and they do require annual meetings. And again, depending on, you know, if you apply for that 501c and then 3 status, then you operate as, you know, you don't pay taxes, and then you're eligible to receive tax-deductible donations. And so how do you file that? There is a Form 1023, which is the application for recognition of exemption under Section 501c3 of the Internal Revenue Code, or the short version or the easy version is the IRS Form 1023-EZ, right? And that's what you file to become a 501c3. So remember I said that in order to form a nonprofit entity, you have to file to become that legal entity at the state level, right? And at the state level, sometimes they call it a nonprofit corporation, sometimes they call it a non-stock corporation. And I think this is the better explanation of what a nonprofit is, because it's not that a nonprofit cannot make profits. You can make profits as a nonprofit corporation, right? But what a nonprofit certainly cannot do is it cannot create stock, or it cannot have ownership. Okay, so it cannot then pass this business on to someone because it cannot be owned by anyone. So if you are a farmer, a beekeeper, and you decide to choose a non-profit entity, you may work as an employee and then receive a retirement package at the end of your career from this business, but you cannot then take that business and sell it to somebody, because by law, you are not the recognized owner of that business. But the reason why people form those nonprofit corporations, or non-stock corporations as they're also called, is, well, the personal assets are your personal assets, or the personal assets of the members are insulated from the organization's liabilities, right? And this happens at the state level. And then if you go to the IRS level or the federal level and you seek that tax exempt status, that's another benefit, and you're also eligible to receive, as I said, those tax deductible donations. And remember, there are those legal documents, those organizing documents. You have your articles of incorporation, you have your bylaws, you have a list of your members, and so on, that you have to abide by, right? Now, an unincorporated nonprofit association. So again, you can be an unincorporated nonprofit association or be recognized as such simply from your actions, right? So if you get together with a group of other people and you're doing, you know, charitable work, whether that is scientific experiments or you're helping educate the public about, you know, conserving bee populations and so on, just by you acting together with these people, you might be forming an unincorporated nonprofit organization without you even knowing, right? That's enough to qualify you as a UNA, an unincorporated nonprofit organization. So, and while that may be good, you'd be like, okay, I can be a nonprofit organization without all of these, structures and organizing documents and having to file all of this 1023 easy and so on. However, simplicity has its trade-offs, right? So remember I said having this incorporated status, you have these wonderful organizing documents that lays out everything, and you know how you're operating, and you know what policies you're going to follow and so on. And then you have these good business practices. You have your accounting, you have your annual reports and so on. An unincorporated nonprofit association does not necessarily keep all of those things because humbug, I don't need to keep all of that, right? And that can land you in a boatload of trouble because you don't know exactly what's going on. And then the biggest thing about an unincorporated nonprofit organization is that even though you're coming together as members and you think you don't have any, I didn't designate myself as a nonprofit association, but let's say, as I said before, you're educating people, and so you have a group of kids that came to your farm, and the members are all there, and you're educating people, and there happen to be, some kids that got stung, and then the parents sued you. Guess what? You are liable for the actions, even if you as a member weren't there that day. You are liable for those lawsuits because by your actions, you created this default nonprofit association. So that's the benefits and the disadvantages of not being incorporated. Okay, so so again, remember when we went through that flow chart, we talked a little bit about what is going to qualify me as a nonprofit. And we talked about that qualifying purpose, right? So these are the three things that you have to remember. You have to have that qualifying purpose first and foremost, and you must answer yes to this question. Is the organization formed exclusively for a qualifying purpose? And that could be for religious or charitable or scientific or educational, anything that is that charitable purpose, right? So for example, when we talk about, and here, remember, it is exclusively, and it has to be for that qualifying purpose. So let's say you have said that you are going to do educational, your nonprofit exists for educational purposes. And we're talking about things, so for example, I'm just going to use a farming example. So if you use, proper ecological techniques to sort of repair land that's been depleted because you've been growing corn for the last 10 years, and because the farm is dedicated to demonstrating techniques and advancing awareness of these scientific principles, and the IRS will most likely say that this farm satisfies an educational purpose, and it would be even better if that farm is open to the public and publishes articles about what it's doing and the benefits of what it's doing, and that it does not make a substantial profit, right? It can make a profit, but that should not be the main purpose, right? And that profit shouldn't be a big part of how it's supported. It could be for charitable purposes, as I say. So, if you're doing things that would be relevant to farming. So if your farm exists to basically help combat poverty or alleviate discrimination or stimulate economic development in, let's say, your area is economically depressed, or if you're providing job training and skills development and so on, then you would have met that bar of having a charitable purpose, right? Alternatively, if you're doing scientific work, you're addressing bee population, you're addressing pests of bees and so on, then you would have met that scientific purpose, okay? So it has to be, you have to meet that first test. And then, as I said, you have to meet the test for commerciality, that you are not overly commercial in nature and that you're not unduly competing with for-profit businesses. And simply because in a lot of cases, as I said before, you know, you're allowed all of these tax exempt status and you're allowed to get all of these donations from you know, tax deductible donations and so on. And so you have the upper advantage. And generally, as a nonprofit, then you can choose to sort of lower your price because, you know, profits is not your big thing. So you can sell, you can undercut these for-profit businesses, right? And that is not going to be acceptable. So you have to pass the commerciality test, and of course the application, you know, takes you through a series of steps that makes sure that you have passed that. And again, as I said, more than 1/3 of your revenue must come from some sort of public support. Whether that's donors, whether that's the public in general, and so on. And there are some caveats with that public support test. It cannot be, so you can't have, you know, 95% of your support coming from one individual donor. Then you violated that public support test. So it must be from a few donors, and it must be at least more than 1/3 of your revenue. And so that is, you know, the 411 with respect to the, you know, how does a 501c3 work? How do you set it up? What are the things that you need to do or pass? What are the tests you need to pass in order to form it? And then the other part, remember we said the last phase of having these business entities is to implement good business practices. And as a, you know, an agribusiness management specialist, I say this to all businesses, whether you're a formal entity or default entity, you really want to make sure that you are running your business with these good business practices. But more so for these formal entities, you can lose your status as that formal entity, whatever you designated as your entity. You can lose your status if, for example, you do not keep up with these good business practices, right? For example, if you're not keeping the business's financial affairs separate from the owners, that's violating your entity status. You must abide by the bylaws. The board of directors and the officers must abide by the bylaws. You cannot say as a formal entity, oh, I have limited liability protection, so I'll go out and I'll take a bunch of loans and I will spend money recklessly and so on. No, you can't do that, because negligence and recklessness is one case where you can lose that veil of legal liability protection that we talked about before. Of course, you do have to file if there are any annual fees, if you have to obtain any licenses and registrations, you have to do that in order to keep your status. In some cases, even if you have tax exempt status, you do have to file some sort of tax paperwork. And of course, maintaining your business as a business means that you would be tasked with keeping financial and business records. And always a good idea to prepare your financial reports to see, you know, am I operating at break even? Am I operating at a loss, and that kind of thing. And as I said, this goes for formal entities because you can lose your designation, but it's also a good idea for default entities, because if you do want certain tax breaks and so on as a sole proprietor or a general partnership or an unincorporated nonprofit organization, then you have to show that you are running your business as a quote unquote business. So I know we're almost out of time. A lot of this information and much, much more is outlined in this Farmer's Guide to Business Structures. Here is the link for this. You can access it free. And when I talked about organizing documents and bylaw agreements and so on, this is a really wonderful guide because it does have a lot of those templates to help you jumpstart some of those organizing documents. And it has a lot more in terms of, the specifics for each of these business entities. So it really takes you through a lot of the decision processes, the decision steps to select the entity that's best for you. So I really encourage you to download this and have it as a resource for you and the members of your organization, because it really does a good job of laying out all of the other things that you needed to know. Today I have just touched the surface, but certainly this would be a wonderful tool with a lot of supporting information and resources, as I say, to start thinking about choosing and deciding and forming and implementing your business entity. So this is the point where we will take any questions. And so I would be happy to answer any questions that we have from Joel or Steve. Or that, yes. Steve, you are muted. So you might want to unmute yourself. There you go.
Can you hear me now?
I can hear you now.
All right, Doctor, first, let me express our appreciation for your profound ability to stay with your presentation despite limited audience. But I will assure you, there is no one else in the state other than Joel and myself that are intensely interested in your presentation. So I appreciate your presentation. I appreciate your ability to continue, and I have questions.
Okay, wonderful.
All right. I am the treasurer of the West Virginia Beekeepers Association. Joel is the secretary, our attorney at large. So we fall back on him for everything that gets us in trouble.
Okay.
But we are incorporated. We are incorporated based on our educational ability, our programs for novices, our programs in the schools to the public, our programs such as this. So we are incorporated as a nonprofit. As a nonprofit, I have a few questions.
Sure.
What is the extent of the liability of our officers as a nonprofit?
Okay, so in that organizing document, right, you would have listed all your members, right?
Right.
So basically, if you're incorporated, then whatever, so I know it's a nonprofit organization, was there anywhere along the line you were required to say, what is the total, what is the value of your organization, what is that worth? Because that's what your liability is going to be limited to, right? Whatever that business is, quote unquote, worth.
To the best of my knowledge, we have not been forced to express the value of our assets. Our assets are only around $32,000.
Right.
But we have not, Joel, anywhere have we expressed the value of our assets?
No, and remember, we had also looked, our insurance policy has D&O, directors and officers coverage.
Right. Okay. So that's also important, right? So, but then you have to also recognize what is
turn the light out behind me. Excuse me.
Then you have to recognize what is the threshold for that insurance coverage, right? And what does that spell out in terms of what would be covered as far as the liability for your members?
Joel?
Yeah, so I think based on the way that we're set up, I mean, I think that um, to the extent there would be some event, a casualty or something, then, obviously the assets of the association would be susceptible to that, particularly the cash. But in terms of the D&O, in terms of the officers and then the members, there shouldn't be any liability for them, absent gross negligence or willful or wanton misconduct.
Yeah.
So you don't think we need to develop a policy covering officers for liability?
No, I don't think so, because I think it's kind of spelled out in the code, in West Virginia code, and as long as the officers are only acting in their capacity as officers and they're acting in the ordinary routine, as long as they're not doing anything grossly negligent. So in other words, if we're at the next annual meeting and I don't get a ribbon in the honey show and I sock somebody, then I'm going to be liable for that, because that's outside my scope of being an officer. But if I'm if we for instance, if we maybe approach a new vendor and purchase some equipment for some program, and that person absconds with our money, as long as we were acting in good faith, then we're not going to be liable for that loss.
All right. Okay. All right. Couple more questions. We are formulated as a nonprofit.
Mm-hmm.
I am not familiar with corporate tax law, but we formulated primarily so that we could take contributions as a tax exempt contribution. With current tax laws, charitable contributions no longer seem to be included. Is that of any value to us at this point?
So did you file for that? So are you 501c3 or?
No,
not?
501c3.
Yeah.
And we filed that primarily to get tax exempt contributions for contributions to our conferences.
Right. But you said the corporate laws is not going to recognize that, or they no longer do?
If we receive a contribution from a corporate entity, that's still tax exempt?
Yes, it is. And then the donor, that is also that's also a tax exempt donation for them as well.
All right. From an individual donor, does tax exempt status have any bearing on current tax laws? I mean, charitable contributions, to my understanding, are no longer considered. If an individual contributes to us as a tax exempt organization, and they file that on their income tax return?
As a donation, as a tax exempt donation, to the best of my knowledge. So corporate laws, is kind of above my pay grade, but to the best of my
I understand that.
Yeah.
you are infinitely above my tax exempt, because Louisa doesn't pay me. Louisa.
I think, Steve, that going to your heart of your question is, I think Dr. Singh Knights, everything she said is accurate. I think that the issue is, a contribution to us is tax exempt for us. Importantly, it's not income. We don't pay income tax on that. And from an individual person, that would be a tax deductible donation. But for the average person, that they don't get that deduction now, because the standard deduction's doubled.
Right.
Before, a lot of people, what you put in the offering plate or what you give to the West Virginia Beekeeper Association, that's deductible. But now the standard deduction's twice as much, so people aren't itemizing anymore, really.
Yeah.
All right. Another question. Not liability to officers, but we do a variety of things as an organization. For example, at a conference, we do testing on beekeepers of their competence in beekeeping. We do a portion with honeybee hives exposed to the public. What's the extent of our liability as a nonprofit organization on that exposure to the public of those stinging honeybees?
Right. So I think yours is a unique business. So remember I said, once you've seen one farm or one business organization, you've seen one business organization, right? Because
Right.
now you have that product or that service, that educational service with those stinging bees. And so, yes, your nonprofit organization, you have that limited liability if you're sued to, the value of the business, but that, remember the business practices we talked about, right? One key business practice would be, if you know that you have these stinging bees, you want to protect yourself with some additional insurance, right? Irrespective of your business entity status and your tax status, right? So you do want to show that you're recognizing the limitations of your business and you have that additional insurance policy that would cover the public at large from the work that you're doing.
So you would suggest extended liability insurance?
I certainly would.
All right. Another question. If everything falls in, the skies fall from heaven, we are crushed, we are forced to dissolve, we have assets.
Mm-hmm.
What becomes of those assets?
So that's where you would lay those out in your organizing document. As an organization, you would stipulate, in the event that this happens, right? And people are getting stung and nobody wants to come to see bees anymore and we've gotten robot bees or something like that, no need for us, then this is how we're going to dissolve the assets. This is how we're going to, to give it out to our members, or we're going to give it to another charitable organization or something like that. But you have to say that up front. Excuse me, can it be Steve inheriting all the assets at some point if you had to fold a business? You have to state that in your organizing document.
In our bylaws or in the Constitution?
Yeah.
In your bylaws, I believe it would be.
Okay.
Yeah.
Joan, am I right about that?
Yeah, and so for 501c3, if you're accepting donations as a 501c3, then if upon your dissolution, you either have to turn that money over to another 501c3 or to the state of West Virginia or to the federal government.
All right. Did you get that, Joel? You have an assignment.
The IRS, I'll double check on it. The IRS shouldn't have approved the 501c3 status unless that was written down somewhere.
We're approved, but if we dissolve,
So that means it's there. Now you have to go back and check to see what's there, if that's what you want to be there, or if you need to change that, right? Because that's what they're going to uphold you to.
Joel.
Double check on that.
Doctor,
And then,
those are the only questions I have, but let me again express my appreciation. I
You're
know
most
that the
welcome.
audience was very limited, but I will tell you, there have not been anyone else in the association with all of the workshops more intensely interested than Joel and I have been in what you have to
Well,
offer.
Steve, you more than make up for the lack of people attending with your questions, so I
You know
appreciate
what? We're the important people. We are the important people.
I don't know about that.
So,
Teresa, do you have any questions?
No, I'm sorry. I was moderating another workshop, or I would have been in here myself. But it was quite interesting what you already talked about. Something else, Steve, I think another reason why we are 501c3 is so that we could take advantage of monies like grant monies and such.
Right. But individual and groups from incorporated commission county commissioners, things like that. So we have money coming in, but we have to be clearly identify from whom it comes, how it's used, how it's applicable, and we do express. We offer a written appreciation for the donations, and that it's not used for anything other than contributions for educational purposes, things like that. So we're pretty clear on that. I mean, we're good. I just wanted to make sure that are we still potential recipients from individual contributions, because state law or tax laws have changed, and those contributions don't carry the weight that they used to carry.
Yeah, I think the problem is the incentive for the average person to make charitable donations has diminished.
Right.
Before I forget, on your insurance question, we had taken a look at that, and because remember our umbrella policy excluded animal activities.
Right.
I could never get a hold of our agent because the main insurance company wouldn't talk to me. They said I'd talk to the agent, and the agent's office is closed for coronavirus. So, but what the Hartford told me was that we can get coverage for that, but we need to do it on a per event basis.
Right.
They said if we didn't do it on a per event basis, it would be prohibitively expensive.
Yeah.
I do have a couple of questions, and this is not necessarily specific to beekeeping or just when you're seeing farmers and things like that around the state, whether they're beekeepers or turnip growers or whatever they are. What do you see as some of the more common mistakes, business mistakes that people make? And the reason I ask is because I think a lot of folks, they get invested in a hobby, whether it's beekeeping or they want to engage in some kind of agricultural production, and they are perhaps very good at what they're producing, but they kind of walk before they can run, and they don't make any money. And a lot of times I feel like that's not necessarily because they're not good at what they do, but just because they're making business mistakes. So I think my question is, when you visit farmers and speak to them as an extension agent, what do you see is the biggest mistake that people make, and what would you tell people that perhaps are trying to get their business going? That's not a good question, but I think you understand what I'm asking.
Yeah, I think one of the things, so I am an agribusiness management specialist, right? So obviously I think that the major heartburn issue for people and that the major deficiencies that people have is the ability to keep records and to use those records to help improve your business. The bottom line is everybody keeps the records they need, because if you file in your taxes, you have the necessary records. It's about looking at those records. It's about putting them in a form where, because your records tell you the story about what you're doing good, what you're not doing so good, and what you can improve on, right? If you really make use of those records. And that's where we should start. People, so they're good at what they do, but they make, as you said, Joe, they make bad business decisions, right? And then they keep throwing good money after bad because they keep going down. They're getting too big for the markets that they have, or they're too small for the markets they have, or they're growing the wrong products, or they're growing things that aren't selling for the price they need to, or they don't know how to price their products because they don't have a clue about what it's costing them to produce what they're producing. All of that goes back, and then they buy 5 tractors and it's sitting in their barn for 8 months out of the year, 9 months out of the year, right? When they could have made another decision. They could have leased a tractor, they could have borrowed their neighbor's tractor, pay them for it, those kinds of things. So it comes back to, am I doing this business, am I operating my farm from a business perspective? If you're not doing that, then you have a hobby farm. Right. And I don't tell people that as vocally as I'm telling you. I know if you share this thing, people are going to see that and see me get all hyped up about that. But the thing is, people don't like to see that, right? Because everybody gets all of these, social benefits from farming, right? Health benefits, recreational benefits. They share their food with their neighbors and so on. But that doesn't mean that you should spend your entire paycheck trying to make this hobby farm a hobby farm. It is what it is. It's never going to be a business unless you treat it like a business. So that's where I begin by telling people, this is the one thing that for any session I do, this is the one takeaway I want people to have. If you don't know how much it's costing you to produce a unit of what you're producing, it could be a bushel of corn, you know, whatever, then you shouldn't be farming. You know, if you don't have a handle on your costs, how are you going to know if you're making a profit? How are you going to know when, you know, the farmer's market or the restaurant say, hey, I'm going to pay you $2 a pound for your tomatoes? How do you know if that's a good price? If you don't know what it's costing you, how do you know whether you can afford that new tractor? Well, the thing is, people buy a tractor without knowing if they can afford it or not, right? But how do you know you can afford that new tractor? You know?
Yeah, I wish I had you on speed dial because I can't tell you how many times you talk to someone who's and they don't know how much a jar of honey costs them to produce, or they don't know how much it costs to keep a beehive alive for a given year.
Anything like that. Yeah. You know, I went to the Department of Ag and Well Extension. We put on a thing. We had some speakers from the Department of Ag, and so we had some tractor safety, you know, and this guy is talking and he's really hyped up about, you know, his tractors and tractor safety. And you know, everybody seems to get so excited about these tractors. It's like the more tractors you have, the more successful you seem, right? And then there was also a talk about, you know, micro dairy. So we have all these dairies going out of business. You have to understand why the dairies going out of business, right? But the Department of Ag is talking about starting these micro dairies. And we had a few people put their hands up and they're like, well, how do you go about starting one of these micro dairies without thinking? And they're like, well, you can get your equipment here and you can do that. And I'm like, hold up. The first thing, if you're thinking about starting a micro dairy, is to figure out, where am I going to sell my products? That's the first thing that you have to decide. Unless there is a market for the product, all you have is museum pieces. You will have cheese and butter and some kind of milk, but you can't sell it. If you can't sell it, you don't have a farm business, you have a museum. And unless you want to be in the business of being in a museum, then, you know, that's not for you. So don't put the cart in front of the horse. You have to think about it as any business. Farming is no different. We have a lot of small businesses. That's the reason a lot of these small businesses fail, because they get trumped up. They're like, oh, I have the perfect name for my business. Let me go start this business, without thinking about, do I have the markets? Will they be willing to pay the price? What is it going to cost me? Those kinds of things, you know? So, yeah, you don't want to get me started talking, Joel, because
I won't. I think that this is so important. I would like to have you talk on just that subject alone, because I mean, and you know, I'm not the best business person by any means,
Yeah.
but knowing those market forces and having someone that actually sees the different aspects of not just
coming
bees,
up with
but
a
you know,
basic
food product.
budget for what are you proposing to do. If you can't make it work on paper, you're never going to make it work in the field, right? So you have to make it work on paper. Think through it, you know, figure out what is it going to take. That's the reality check before you spend a dollar. So I would be happy to come talk to whomever you want me to talk to, because that's the stuff I'm passionate about. We have to stop doing this the way Grandpa did it, right? Because Grandpa probably didn't have a choice, right? But, you know, we've got a choice, and we can do it better if we think about what it is we're doing.
Yeah,
Let's do it. You're hired. We'll schedule another one.
There we go.
I'm hoping to do maybe a monthly or a series, you know, so we'll talk about that at the board meeting, guys, but you know, this would be a great talk.
Yeah.
Yeah, I personally think that would be just help a lot of people in a lot of ways.
Yeah.
So let me
Great.
let me say this, Doctor. Despite the limited audience, I'm sure you've extended question and answers far beyond other workshops. And your knowledge and your input has been tremendously appreciated.
Oh, well,
by
I
two or
appreciate
three
that
of us.
so much.
And we are indebted. We truly do. We've
Okay.
gained a lot from this presentation, and we appreciate your contribution. Thank you so
Well,
much.
I appreciate being appreciated. Thank you so much.